welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. We're going to be mixing technicals with fundamentals today. And more or less, we're going to be going through major pairs. If we have some time, we may be having a look also at US stock markets, possibly the path of oil prices. And for precious metals, we may have a look at gold price as well. Should you have any trading instruments you would like us to have a look at, please feel free to add a comment in the chat box. And if we have time today, we have a look. If not, we can always make time tomorrow. That's not an issue. Now, the main element of market movements practically over the start of the week may have been the renewal of USD's bearish tendencies. Now, this week actually started on Friday, last Friday, with the speech of Fed Chairman Powell at the Jackson Hole Symposium. The speech more or less tended to verify market expectations for possible rate cuts by the bank starting in the September meeting. Now, it's characteristic that before the Jackson Hole Symposium, the market was pricing in the Fed to start cutting rates with a 25 basis points rate cut in the September meeting, proceed with another 25 basis points rate cut in the November meeting, and deliver just before Christmas a 50 basis points, a double rate cut in the December meeting. Now, the expectations for the double rate cut have now been brought forward, and the market now prices in the double rate cut to be delivered in November, which signaled exactly the enhancement and the certainty of the market's dovish expectations. It may seem a little bit far-fetched, yet overall the dovish orientation of the market is clear. And I think it was characteristic that Powell was quoted saying that it's time to adjust monetary policy, implying that rate cuts are coming in the September meeting. However, we may see the Fed having some difficulty in actually delivering what the market expects. And should there be signals about fewer rate cuts in the coming months, albeit, or if you prefer, despite the overall direction being verified, but even fewer cuts would be forcing the market to reposition itself. And in such a case, we may see the USD gaining some support. Other than that, the market expectations for the Fed to start cutting rates are expected to continue weakening the USD. On the other hand, we have to note that USD's weakening may have benefited gold's price, yet the benefit seems to be a little bit capped. And definitely the easing or the expectations for an easing of the financial environment in the US economy by rate cuts seem to have improved the market sentiment and more or less tended to provide some support for US stock markets. Now we have in front of us Euro USD, and at this point it would be interesting to note that despite the US dollar being quite weak, in my opinion, the euro has problems by itself, and it was partially due to the market expectations for the ECB to continue cutting rates non-stop. It may not proceed with a double rate cut, but it will also possibly be delivering a 1% rate cut by the end of the year. And that tends to weigh on the euro. At the same time, I would be also highlighting the difficulties in the economic outlook of the Eurozone, especially about the manufacturing sector, which is a key sector for Eurozone's economy, especially Germany's. The preliminary PMI figures for August, which were released last Thursday, were quite telling. It's characteristic that the manufacturing sector suffered another contraction of economic activity, or seems so for the current month. And in my opinion, that tends to weigh on the macroeconomic outlook as well. So that's an issue which tends to tantalize euro traders, or at least weigh on the euro somewhat. Now, on a technical level, the pair was able to rise and breach the 1.1140 resistance line, now turned to support, and definitely the upward movement is being maintained. The upward trend line remains intact. The RSI indicator is above the reading of 70, implying a strong bullish sentiment on behalf of the market. Yet, at the same time, I would be noting that the pair may be at overbought levels and may be ripe for a correction lower. Similar signals are coming out from the fact that the price action is constantly testing, or if you prefer, flirting with the upper Bollinger Band. Yet for the time being, the bullish outlook remains intact. At the same time, though, I would be warning about any possible correction lower. And any possible correction lower would be treated as a correction as long as the price action remains above the upward trend line, guiding the pair since the 2nd of August, if I'm correct. Let's have a look. Yep, since the 2nd of August. Now, Euro USD bulls have as the next possible target after breaching the R1 to 1.1250, which is the current R2. We will have to correct and reverse the rule of the first resistance line, given that it has been broken into a support line. And let's go hunting for a new ultimate resistance level, a new R3. Let's unlock the chart, go back, quite well back in time. And we have one here. Nice double peak, which tends to verify the level as a valid resistance line. And that would be set as red at 1.1490. Readjusting the chart. Let's correct the labels as well. $1.1490 being the R3. The R2 being set at 1.1385. The R1 at 1.1250. The S1 quite lower at 1.1140. The S2 at 1.06. Sorry, 1.1065. And the S3 at 1.0980. Please note that the distance between the support lines is quite narrower than between the resistance lines, and that has also to do with the fact that we have far more price action at the support line due to the ascending trend of the pair. At this point, it would be interesting to note that the pair has reached practically, if I'm correct, 13-month high. Let's have a look. Yeah, the last time we saw such price levels was since the 20th of September. Sorry, 20th of July 2023. We're talking about 13 months. So for the time being, once again, we tend to maintain a bullish outlook. Set the next possible target for the bulls at the 1.1250 resistance line. That's the R1. I would be noting also the possibility once again for a possible correction lower. Mind you that as long as the price action, should the correction lower occur, as long as the price action remains above the upward trend line, that tends to allow the bullish outlook to survive. Should the bulls maintain a clear-cut movement to the upside, I wouldn't be surprised to see the price action of your USD reaching, if not even breaching, the R1 1.1250. My point of view is that we may see some bearish price action for the USD, not only against the euro but against other currencies as well, at the American Open today. It's going to be quite interesting to see how the market will be reacting in the aftermath of Chairman Powell's speech. And should the bearish tendencies be maintained, I think that will be most probably across the board. However, that remains to be seen. Let's have a look at USD/JPY, where we see a reverse picture. Price action of USD/JPY remains bearish. And at this point, I would be noting that despite a small stabilization right here, we saw that on Friday and today during the Asian and early European session, the downward movement was maintained. Let me readjust the support lines here. And definitely I'm setting support line right here. Another one here, moving downwards. And another one a little bit lower. I'm touching exactly the truths. You can see them here as well. Readjusting the chart. This could go a little bit higher. And at this point, I would be setting resistance line here. Okay, let's set the labels straight. Now, JPY has an additional reason to be a little bit more bullish. It's not only the weakening of the US dollar, but also I would say that BOJ's hawkishness tends to be also a bearish factor behind the pair's fall. And at this point, I would be noting that we may see also some safe haven inflows for the JPY side of the pair, given the tensions in the Middle East, which are escalating. At least there seem to be some worries of the market for those. On the other hand, I would also be noting that we're going to be having discussions between Chinese and US officials in the coming days. That's another reason for safe haven flows, either outwards or inwards. It will depend on the outcome of the negotiations. Setting the S1 at 143.45. The S2 at 140.15. And finally, the S1 at 37.20. Moving now for the label of the S3. That's it. Let's lock the last levels in. So we tend to maintain a bearish outlook given the downward movement, which was instigated, if I'm correct, on the 16th of the month. Yep, 16th of August, the drop began right here after hitting the ceiling at the R2. The RSI indicator remains close to the reading of 30. Has not surpassed it just yet. It tends to imply a strong bearish sentiment on behalf of the market for the pair. Should the bears maintain control as expected, I wouldn't be surprised to see the price action breaching below the S1 143.45 and start actively aiming for the S2 140.15, a level which practically was verified right here on the 28th of December last year. The breaking here, I would be commenting this as a false break, as it was very short-lived. However, I would expect the price action to hit the S2 should the bears maintain control. Let's have a look at cable. Now, cable is a very interesting pair for the following reason. We had a substantial strengthening of GBP USD over the past week, and note that we had an upward trend line. However, that same upward trend line intensified its upward slope. You can see it right here. It's characteristic that the price action of the pair of cable breached the 1.3040 and then the 1.3140. We're talking about over 100 pips movement here. I'm going to be switching them both into support lines. Now, the pound seems to be supported on a number of reasons. On the one hand, we have BOE, which is expected to start cutting rates. Actually has already started to cut rates at the last meeting. But the market's expectations are for the bank to continue cutting rates at a slower pace than its counterparts. And I'm highlighting here the ECB and the Fed. So BOE is expected to follow a less dovish path. And I think that may be one of the key reasons why the pound is getting some support. The second issue I would be highlighting for the pound would be the new government. On a political level, the UK seems to be finding some stability. The signal for no drama in the UK political scene seems to have benefited the pound, in my opinion. Now, I'm not saying that the current government is so market friendly. Actually, it's not. It's Labour. But for the time being, pound traders were able to, I wouldn't say fixate, but more or less stabilize on a political level, and that allowed them to maintain an outlook more towards monetary policy and economic outlook of the UK. We already covered the monetary policy part. On a macroeconomic level, I would highlight that the preliminary PMI figures for August, which were released on Thursday, tended to paint a better picture of the prospects of economic activity in the UK economy rather than the Eurozone. And I think this comparison on a macroeconomic level tended to benefit the pound. By the way, we have to note here that in the current week, there are no major financial releases regarding the UK. So pound traders may be forced to actually rely more on fundamentals, which include monetary policy and the political spectrum rather than economic data. Should optimism about these two be maintained, I would expect the pound to remain supported in the coming days as well. Now let's have a look at resistance lines, given that we have an upward trend line guiding the pair, so the upward momentum is present, the bullish outlook is still present. Also, there is an indicator which has surpassed above the reading of 70. It's calculated 74 roughly. So that tends to highlight the strong bullish sentiment on behalf of the market for the pair. On the other hand, though, I would be noting that the fact that the RSI indicator is above the reading of 70 may imply that the pair may be at overbought levels and once again may be ripe for a correction lower. Similar signals we're getting also from the fact that the price action is constantly breaching the upper Bollinger Band. And that may force the price action to actually slow down its upward movement, maybe even correct a bit lower. As long as the price action, though, remains above the upward trend line, and I'm talking about the initial trend line right here, which started on the 8th of August, not the secondary one, I think the bullish outlook would still be present. I would require a drop below the initial upward trend line for me to change my bullish outlook for the pair. Let's have a look at how high the pair could actually go. Okay, we're entering periods of 1 could be set here. You can see how the price action of the pair hit a ceiling here. And the second would be all the way up here. I'm going to be ignoring this peak and setting the next possible resistance line on this peak. And let's color these in red first of all to signify that they're resistance lines. The one is at 1.3435. And the second at 1.3640. Coloring this also in red. It's a little bit wide, but in my opinion it's totally worth it. I'm not actually looking for symmetry here. I'm more or less relying on peaks and troughs. Starting with the S3, which is being placed at 1.2890, the S2 at 1.3040, the S1 at 1.3140, the R1 at 1.3290, the R2 at 1.3435, and the R3 at 1.3640. Okay, so should the bulls maintain control, and I think that would become more obvious during the American session, a possible weakening of the USD and actually further strengthening of the pound could, I wouldn't say would, it could push the pair as high as the R1 1.3290. By the way, note how the pair has 1, 2, 3, 4, 5, 6, 7 days of consecutive wins, which once again highlights the bullish sentiment of the market. On the other hand, though, I'm a little bit more cautious here, a little bit more conservative. May also imply that the bulls may have overdone it. This 7-day rally maybe a little bit far-fetched. Anyway, bullish outlook still present. For a bearish outlook, the bar is pretty high. The price action would have to drop, breach the first upward trend line, breach the S1 1.3140. I would require also a breach of the S2 1.3040. We're talking about 100 pips drop plus. And finally, breach also the initial upward trend line, starting to aim for the S3. You're talking about a drop of around 150 pips plus. So it's going to be difficult, but should that occur, especially should the upward trend lines be broken, that would be a signal that the upward motion has been interrupted and it's time to change your outlook. Let's have a look at USD CAD. Whoa, a huge drop of USD CAD during Friday and relative stabilization today, which is understandable on a technical level, given that the price action has breached the low Bollinger Band. This has to do more, in my opinion, with the weakening of the US dollar and not so much as a strengthening of the Canadian dollar. On the fundamental level, we have already discussed the USD fundamentals. On the Canadian side of the border, I would be noting that it seems that the lockout of railway workers, which was initiated, if I'm correct, on Thursday, may be rendered illegal, not illegal as such, but the court may force the companies to allow workers to restart work, which could be supportive for the Canadian macroeconomic outlook somewhat, as that would allow for economic activity to restart somewhat and be enhanced. On the other hand, should the lockout be maintained by the railway companies and the dispute not be resolved, that could weigh somewhat on the Canadian dollar and allow the pair to stabilize somewhat. At this point, I would be also noting the possible effect of oil prices on the Canadian dollar, given the status of the Canadian economy as a major oil producer and exporter. And at this point, bear in mind that oil prices, at least for WTI prices, they have been on the rise for Thursday and Friday and have been rising today as well. We see that later on. But the overall idea you have to keep in mind is that should oil prices continue rising, then we may see the loonie also getting some support here. And that could force USD CAD even lower. For the time being, we definitely have to switch the S1, which has been broken, into a resistance line, given that the price action has moved lower. Let's correct the labels as well, setting the S3 at 1.3185, the S2 at 1.3340, the S1 at 1.3475, the R1 at 1.3590, the R2 at 1.3720, the R3 at 1.3845, locking everything in. The downward trend line, in my opinion, has to be shifted a little bit to the right. And this would allow us practically to highlight a better touch on the truths at which the downward trend line is resting. It's quite steep still, and the downward motion of Friday was very intense. It was characteristic how the price action in the daily chart broke below the lower Bollinger Band, so that may be forcing the price action of USD CAD to stabilize somewhat or allow cut any force on behalf of the bears of the pair. Similar signals we're getting also by the RSI indicator, which has dived below the reading of 30, implying on the one hand a strong bearish sentiment on behalf of the market for the pair, yet on the flip side, maybe also implying that the bears may have overdone it and the pair may be ripe for correction higher. Okay, last pair for the day would be AUD-USD. Rising. Let me readjust the chart just a bit. Here we are. It's interesting, and I'm highlighting here the fact that on a technical level, the price action hit a ceiling at the 0.6795. And you have one touch here, which forced the price action lower. And you can see how the level was able to practically, give me a sec, 67.95. The same level was able to hold the upward motion of the pair in the past once again. So it's very characteristic, and in my opinion, it's something to take notice of. Here, you have it once, twice. At the same time, please note that the price action was correcting lower after once hitting the level, but it also broke the upper Bollinger Band, something which happened also here. Now, the RSI indicator, despite hitting also ceiling at the reading of 17, correcting a bit lower, it's still pretty high. It's at 65, which may imply that the bullish sentiment may have eased, but it's still present. And that's something which is also supported by the upward trend line, which remains intact. For a change of the bullish outlook, we would require the pair to breach the S1 0.6710 and also breach the pre-mentioned upward trend line. And at that point, we will have to decide, once that happens, if it happens, whether we are going for a bearish outlook or whether we are accepting a possible stabilization of the pair between the S1 and the S2. For the time being, once again, bullish outlook remains in place. On the fundamentals regarding the Aussie, I would be highlighting two issues. The first would be the release of Australia's CPI rates there for July. A possible acceleration of the rates, if I'm correct, the July rate year on year was at 3.9%. A possible acceleration of the rate, or even a failure of the rates to materially slow down, could re-engage a discussion among RBA policymakers for a possible rate hike. It's characteristic that despite central banks of other economies being prepared or already cutting rates, RBA was in its last meeting discussing a possible hike, yet rejected the scenario and preferred to remain on hold for a longer period. But a possible acceleration of the CPI rates or a failure of them to slow down may force RBA policymakers to start discussing a possible rate hike. The second issue I would be highlighting here would be the market sentiment, which is also locked in with China, developments in China. That's why the negotiations, or the discussions, if you prefer, between US and Chinese policymakers are very important. Should we see an easing of the tensions between the US and China on a trade level, that may have a positive impact on the Aussie as well. And I'm noting this because for the time being, we have a Chinese manufacturing sector which seems to be struggling to keep economic activity afloat. The Australian economy is exporting a wide amount of raw materials to the Chinese manufacturing sector. So should we see an easing of the tensions in the US-China relationships, that could allow for hopes for more Australian exports of raw material towards China and thus push the Aussie a little bit higher. Last but not least, I would be also noting the improvement of the market sentiment as a possible factor which could provide some support for the Aussie. So be on the watch out for these three. I think we should have covered what we talked about for the time being. We are leaving you and we have a new session tomorrow at around the same time. From all of us here at IronFX, best wishes for solid trading.
So as per usual, before we get started, just a risk warning. So our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. A disclaimer: the information in this webinar should not be construed as investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of material is strictly prohibited. So I'm Melanie. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. And today we're going to be talking about IC trading. IC trading, yeah. So this is a trading strategy that is pretty unique. So here's our agenda for today. We'll talk about what exactly it is and then get into some of the key concepts, followed by understanding what exactly it is and how you can make use of it. And then we'll look at what smart money looks like in price action. So if you guys have any questions throughout the webinar, feel free to pop a question into the chat and I will be happy to answer them. Okay, let's go ahead and get started. So what is ICT? So basically ICT stands for inner circle trading. Okay, let me just allow you to pop your questions into the chat. Okay, so let's start by defining what exactly we mean by inner circle trading. So ICT, or inner circle trading, is a trading methodology that focuses on understanding the inner workings of the financial markets. So it involves analyzing market dynamics, identifying supply and demand zones, and utilizing price action analysis to make informed trading decisions. So it has now grown to become one of the most popular trading strategies around, focusing instead solely on price action. and it was originally created by Michael Huddleston to trade the forex market, but currently traders are using the same strategies to make profit in all and any market that they trade. So, yeah. So why exactly is it important for us to understand what ICT is? So in today's highly volatile and competitive financial markets, having a deep understanding of how the markets operate can give you a significant edge as traders. So by mastering the ICT techniques, you can enhance your ability to identify high probability trading opportunities and effectively manage your risk. So what exactly it is basically employing chart technical analysis and operates under the premise that by studying price movements, support and resistance levels, and order blocks, one can to some extent pinpoint the areas with the highest liquidity concentration and consequently forecast emerging trends. Okay, so let's get into some of the key concepts. Okay, so firstly, for our key concepts, we'll go through liquidity, followed by displacement, market structure shift, inducement, fair value gap, optimal trade entry, and lastly, balance price range or order block. So these are the fundamentals that you need to know in order to take advantage of trading in this style. So first key concept we'll go through is liquidity. So there are basically two types of liquidity. There's the buy side and sell side. Um so firstly, buy side liquidity represents a level on the chart where short sellers will have their stops positioned. So sell side liquidity is just the opposite of that. So it represents a level on the chart where long buyers traders will place their stops. In both cases, these levels are found at or near extremes, as the tops and bottoms of ranges are often viewed where traders are proven wrong and therefore will want to get out of their trades. So here's an example. So smart money players understand the nature of this concept and commonly will accumulate or distribute positions near levels where many stops reside. So you can see here, our sell side is on the bottom where the swing lows are. Buy side is where the swing highs are. So basically, it's where your resistance and your support levels are. So it is in part the sheer amount of stops at key levels, like those that I've just identified on this chart, that allow a larger player to fully realize their position. So once the level at which many stops are placed has been traded through, it's often that the price will reverse course and head in the opposite direction, seeking liquidity at the opposite extreme. Okay, so you can see normally at these resistance levels, you would expect price to reverse off of these levels. Similarly, for your support levels, you would expect price to bounce off of those levels as well. So that's just basically what we are trying to say over here. Okay, next, let's look at displacement. So displacement in short is a very powerful move in price action, resulting in strong selling or buying pressure. Generally speaking, displacement will appear as a single or a group of candles that are all positioned in the same direction. These candles typically have large real bodies, so you can see in the image here, your strong selling pressure would look like these candlesticks here, which have large real bodies, very short wicks, like you can see here, and that kind of suggests that there is very little disagreement between buyers and sellers. And if we are looking at strong buying pressure, like the one we see over here, similarly, you see that the body of the candlestick is long, whereas the candle wicks are pretty short. So a displacement will normally occur just after a liquidity level has been breached and will often result in the creation of both a fair value gap and a market structure shift. So we'll get into what those mean in a little bit. But basically what it means when we say a displacement occurs after a liquidity level has been breached is if you look at this area here, this is a multiple swing low support level. You can see price has recently broke out of that level. If you can imagine this horizontal line just over here. So it's broken out of it and is reversing off it now. And that is what is resulting in a strong buying pressure. So that's just basically what it means by a liquidity level has been breached. So if you think about it as what we've been going through normally, which is through your support and resistance levels, it's pretty easy to catch. But let me know if you guys have any questions so far. Okay, if not, let's move on to the next key concept, which is a market structure shift. So there are two major market structure shifts. It's just another way of saying it's a trend. So we have an uptrend, which is when the price is making higher highs and higher lows, and a downtrend in which the price is making lower highs and lower lows. So it's pretty straightforward, but if we are referring to something that we talked about previously, um, you can see in this example we have swing lows. Yeah. So these sessions are recorded. I think they will be uploaded onto YouTube, but I'm not too sure. You can email IronFX. I think the email is on their website. So let me just check. But yeah, you should, if you email them, I think they will be able to send you the recording or at least give you the link to the right place. Let me see if I can find the email. Okay, I think if you go onto the ironfx.com website, you can just email them over here, support@ironfx.com. And I think they'll probably send you the link to this recording. Okay, sure, no worries. Okay, so where were we? Yeah, so when you're looking at market structure shift, it's important to find a market structure that has very clear movements in price. So if you look at the GIF that I've included here, there's a very clear price movement with swing highs and lows that are really significant. Okay, another example would be of a clear market structure. This isn't. Oh, let me go back to my slides. Okay, so this is the GIF that I was talking about earlier. So you can see that there are very clear movements in price with clear swing highs and very clear swing lows as well. If we look at this market structure, it's not as clear, but you can see that it's a very clear downtrend. So that's just basically what we're looking for over here. Okay, but typically we recommend you to look for a market structure that's clearer, something like this. Yeah, or something like this as well. So it doesn't have to follow a trend line. So over here you see that we have four um four swing highs that line up on this trend line. And it doesn't have to line up on a trend line. I'm just using this picture to show you what you can look out for. So here you see that we have um higher lows, or rather lower highs, since it's a downtrend. Okay. So next key concept we're looking at is the inducement. So rarely does the price move in a straight line. So within a larger trend, there are almost always counter-trend moves. These counter-trend moves are the results of lower time frame liquidity hunting. So let me show you an example. So if you see in this example where we have identified the market structure shift, it's basically when price has broken below this swing low. Okay, so that's a market structure shift. The inducement is when price has bounced off, which is over here, bounced off and is reversing off of a new resistance level. Okay, so the price will bounce or get rejected and then will target a previous short-term high or low before continuing in the same direction as the longer-term trend. So the short-term high in this case is here, all of the circles over here. Okay, and then it continues in the same direction. In this case, it's a downtrend in the longer term. So, yeah. So inducement is specifically targeting these short-term highs, like those that we've circled, or short-term highs or lows as areas where these stops might be placed. So because you're expecting price to reverse off of these circles, you might decide to place your stop loss right above these levels here. Okay. Okay, now next key concept we're looking at is the fair value gaps. So these are created within the displacement and are defined as instances in which there are inefficiencies or imbalances in the market. So if we visualize what this means, it's basically a three-candle sequence containing one large middle candle whose bordering candles, upper and lower wicks, do not overlap. So let me show you an example of this now. Okay, so if we look at the fair value gaps that have been filled, okay, you can see that these, if you follow the arrows, right, the fair value gaps are basically the levels in which price has retraced and is testing that level again. So it's basically what we previously mentioned as um, overlap resistance or support levels, or in this case, it's support overlap areas. Okay, so you see price reversing, testing that level, bouncing off of it. Similarly, price reverses, tested that level, and reversed off of it. And same thing over here. So in the example that I have here, the fair value gaps that are unfilled are basically the levels that don't reach that same level or the same areas from the previous price. Okay, I hope that makes sense, but you can just look at the chart, the example that I have here. Okay, so maybe to start off, you can look for what we've mentioned in the previous slide, which is the three candle sequence containing one large middle candle whose bordering candles upper and lower wicks do not overlap. So you can look for some of those examples in over here. Okay. So next, let's look at optimal trade entry. So the optimal trade entry represents the best places to get into a trade, and they can be identified by utilizing the Fibonacci between 61.8 and 78.6. So maybe I'll show you an example. Our previous webinars recently were on Fibonacci, but if you missed that, I'll just briefly go through it here. Let me just pull out my, let me just show you guys a website. Okay, so if you missed our Fibonacci series, not to worry because we'll probably go through that again. But because we recently finished that, so it might be a while. But anyway, so the website that we recommend you to go through is theforexarmy.com, and it goes through how exactly to draw a Fibonacci retracement correctly. So there are some videos that you can take note of, the market structure to keep an eye out for. Okay, so if you're looking at using the ICT to find an optimal trade entry, they recommend to use a Fibonacci between 61.8 and 78.6. So although we typically use these levels, you would just be looking at these two levels here. And how that works is basically by looking at the highest starting point to the lowest, okay, or like something here. Shows you the invalid as well. Yeah, but you can just go ahead to this website and take a look. Okay, I think I'll just pop it into the chat. Oh, we have a question. Okay, what happens to FVG that has not been filled? So if we go back to my slides, basically what it means when it's not filled is that we don't expect price to return back to that area anytime soon. So we are not going to use those levels as, we're not going to take note of those levels. We want to take note of these FVGs that have been filled in order to place your stop losses and your take profit levels, yeah, according to those levels. Okay. I'll show you guys on TradingView, there is an indicator that helps you to find FVGs. So it's probably the easiest way to spot those, but I'll show you in a little bit. Okay. Yeah, I was talking about optimal trade entry. So the link that I've popped into the chat basically goes through the fundamentals of how to draw a Fibonacci, which I'll briefly go through here as well. So this is a Fibonacci retracement checklist. So firstly, you want to see is the market structure clear. So we showed you previously how to identify a clear market structure. Next, we want to look for the recent trend, so are prices going up or down, and it's important to always follow the general trend. Next, we want to identify recent major swing lows and swing highs, like those that we've identified previously, and then connect the two extreme points like we have done over here. So since this is a downtrend, your starting point is at the swing high and your ending point is at the lowest swing low. Okay, here you can see all the different Fibonacci numbers that we mentioned in the previous slide. So for the ICT, we are focusing on 61.8 and 78.6. Okay, but it's basically the same thing. Here's another example. So we are looking at the level at which price bounces off either your 61.8 level or your 78.6 level. Okay, now let me get back to my. Okay, so after optimal trade entry, the next key concept is a balanced price range or imbalance. And this is the result of an aggressive move up that's immediately followed by an aggressive move down, or an aggressive move down that's immediately followed by an aggressive move up. For an uptrend, do we start the fib 0 at the bottom or the top? Okay, I'll show you in a bit. Do I have it here? Yeah, so like something like over here, we would draw it, your starting point here, and then your ending point would be here. So your 0% would be at the top. Okay, yeah, balanced price range. So what's left after either of these instances is essentially a double FVG or fair value gap, which can act as a magnet to the price before a continuation move higher or lower. So balanced price ranges can sometimes signal the beginning of a market structure shift, and the price can often retest and reject from those areas. Okay, so now let's look at what smart money looks like in price action. So SMC trading involves looking at order blocks, which is a refined version of supply and demand of an asset, and then your breaker block or mitigation blocks. This is what is traditionally called your support and resistance. Flip zones and then your FVGs, which are imbalances on the market. So when demand outpaces supply or vice versa. And then lastly, your liquidity grabs, which we went through before, are basically the areas in which there is a support level or a resistance level. Okay, now let me pull out my charts. Okay, so if we are looking at DXY, just a random chart, how you basically implement the FVG indicator. Okay, is okay, you go to the indicators, search for fair value gap, and this one. Okay, so this helps you to identify any of the FVGs. Okay, and you can use this on any time frame as well. So I'm on the 1 hour time frame now. Okay. Yeah. So the one that we use is the Luxel Gold one. This one here. This one. Lux Algo. So this automatically helps you to find FVG on any time frame, and it will help you to highlight the level as well. Okay. So you can actually use um these key concepts more as like a checklist when you're using the ICT trading strategy. So firstly, you look for the liquidity, followed by the displacement, look for any market structure shifts, inducements, value gaps, and then use your Fibonacci levels to find your optimal trade entry, followed by the balanced price range, which is basically looking for a double fair value gap over here. Okay, let's look at this example maybe. Okay, if I can find a double fair value gap, I'll show you as an example. But one of the websites we used, okay, let me just share that website with you because this is quite a niche trading strategy. So I'm just gonna share all the resources that we use. Um, so basically what I mean by a double fair value gap. So you can look at this website as well. Um, but basically this is what we are looking at. Okay, so we have a balanced price range up here, which is essentially where price rebounds off of a resistance level. It drops and then it tests that level again. Here it says price testing and rejecting your VPR. Basically, if you were here for our support and resistance levels, we're just talking about a double swing high here. So it's just basically where the level is reversing off of that same level before, the same resistance level as before. Okay, and the reason why we are highlighting this entire area is because that's basically where we see price being attracted to. So it tends to be attracted to such areas and then reverses off of it. Okay, let me go back here. Okay, if we go back to the, yeah, to my chart here. So you can see that our fair value gap is in this area here. Okay, we have this green highlighted area, which is in line with this swing high. If we look at this fair value gap highlighted here, this is in line with this resistance area here as well. Okay, so we're expecting price to continue to rebound off of this area, and drop below it. So that's for resistance levels. We're looking at support levels. Here we have a swing, a, a couple of swing lows that match up with swing highs. Okay, so this is one swing low, two swing lows, and then a swing high, right? So this is a pretty significant level, and using your fair value gap basically helps you to highlight any of such areas. So like I mentioned earlier, these are not really specific levels, they're more so areas. Okay, and if we use, let's see if we can make use of our Fibonacci levels as well. Okay, here we see that we have a nice 38.2 that lines up nicely with this area. Okay, if I look at our 61.8 as well as the 78.6, okay, you can see that that also lines up with the highlighted fair value gaps over here, okay, as well as the 78.6 doesn't really, apart from this swing low, it doesn't really match up, which is fine. It doesn't always have to match up. So you can see that this 61.8 is a pretty significant level here. Okay, the reason why I say it's significant is because we have one swing low, two, 3, and 4 levels that are lining up. So we can expect price to be attracted to that area again and then bounce off of it. Okay. Yeah, I think that's all the time that we have for today. Again, so sorry for the delay because of the time mix-up. But yeah, let me know if you have any other questions. Um, yeah, with regards to the recording, the email is on the IronFX website, and you can probably get the recording from them. And next week, we will be going through the second part of this ICT series. So yeah, stay tuned for that. Yep, I think next week we will start the usual time. So there won't be any scheduling mix-up again. Yeah, but so sorry about that. Thanks everyone. See you guys next week. Bye.